What's up YouTube, it's your boy Balo Trader here. In this new video we'll show you one of the best strategies for most of the people. Lots of traders use it or use some pieces from this one to create their own. But before that, as always, let's open and analyze our first deal. And first pair for today is Canadian dollar to Japanese yen. We will invest in the price drop after the reversal from the resistance line. So let's switch to broker and open a deal for 100 with 4-minute expiration. And back to the trading view for more detailed analysis. We observe a sidewall on equal volumes, which then turns into a sharp local bearish trend and the formation of a new price low. At the given low after the already sharp fall on the impulse, the price sank again after the buyer's attempt to restore growth. But on such a strong impulse, the bulls still have an impact on the formation of growth and there is a return of the price to the resistance level. We can talk about a new sidewall. The price is not so amenable to falling, but at the opening of the trading on the London session, the sellers prevailed in the volume and there was a price collapse, and the transition of the chart in a local correctional flat. This local situation, the fall, does not stop the previously set bullish trend and now it continues. When the breakdown of the maximum we see the resistance from the sellers, we can judge about a further reversal of the price which we have entered. And now, let's get back to the broker. This strategy is as simple as possible and suitable even for those who have just begun to learn the behavior of the market and trade. If you are familiar with the phrase "trend is your friend," then you can already guess which strategy we will talk about today. If you thought of a trend following strategy, then you are absolutely right. This strategy is based on the principle of following the market trend and allows you to profit from price changes in one direction. In this video, we will additionally take a look at the main indicators that can be used with this strategy and of course the principles of the strategy itself. But before we proceed further, I want to recommend you to subscribe to my channel if you are not. I'm regularly sharing lots of useful trading tips and knowledge, so you better not miss it. And by the way, in addition to educational videos on YouTube, I also write educational articles in my open Telegram channel. In this channel, you can find not only articles but also useful literature, educational posts, and videos. In addition to all of these, I run trading sessions with participants of this open Telegram channel as well. You can find the link to join it in the description under the video or in a pinned comment. And let's get back to our trend strategy. The name itself already contains what one should pay attention to when choosing an asset for trading, and these are charts on which there is a trend movement. We distinguish between the following trends. Downtrend, or in other words bearish, this is the place where we sell the asset because the price is falling. The next one is uptrend or bullish, this is where we buy the asset as the price rises. And the last one, lateral or flat, we do nothing as the price is standing still. After the selection of an asset or currency pair where there is a trend movement, the first thing is to determine the direction of the movement. I think visually it is not difficult for anyone, but to simplify the recognition and definition, you can use the indicator moving average. So as you could see on our last seconds of a deal, we got a rollback. So in this case, I will use a cover for 1 minute with $200 on board and steal for the price drop. Moving average is one of the simplest and most widely used indicators in trading. This indicator is an average of prices for a certain period of time. Usually two moving averages are used, fast and slow. If the fast moving average crosses the slow one from bottom to top, it signals an upward trend. And vice versa, if the fast one crosses the slow one from top to bottom, it may be a signal of a downward trend. The initial stage of a trend is called an accumulation phase. This is optimal moment to open a position on growth, bullish, or on fall, bearish. At the next stage of the trend, professional participants who have noticed the trend and are ready to earn on it starts to join. It is characterized by increased interest on the market as more and more traders are willing to take part in possible profitable trades. At this time, there is often a large number of panic decisions based on the behavior of the crowd. which makes trading at this strategy the most risky. Because of this, the probability of a trend reversal at this stage is maximum, and you need to be especially careful when making decisions. Let's make a small pause here to pick up our first plus and move to the next pair, which is British pound to Swiss franc. We're investing in the price reversal and growth. So let's switch to broker and open a deal for 100 with 4-minute expiration. And as always, let's get back to the trading view for more detailed analysis. Let's look at the broader range of movement. The first thing that can be noticed is the working out of the flat on the average volumes without a clear predominance of growth or decline in price. But at the opening of trading at the London session, with the breakdown of the support level on the strong influence of the sellers, the price began to fall and set a new local minimum. With such a drawdown, the chart with the reversal from the new support level went to the correctional pullback to the growth, but the volume from the buyers decreased and sellers again took advantage of the situation to sell the asset. And when the power of the sellers to bring down the price went down, it was waiting for the price to recover to its previous values. So the chart has reached the expected early resistance level and again on the reversal of the seller's trend and went down. And now you and I are entering a growth application after the seller's attempt to set the price value back up. And now let's get back to broker. Are you looking to take your binary options trading to the next level? Then connect to my team in my private Telegram channel. For exclusive access to my personal mentorship, lots of trading sessions, individual feedback, and more educational materials. By joining my team, you will receive invaluable insights and guidance. You will have access to the live trading sessions where you can trade side by side with me and learn from my strategies and techniques. In addition, you will receive individual feedback and support to help you identify areas for improvement and refine your trading skills. To join my team, simply send me a phrase, "I want some honey," in my personal Telegram. The link to contact me will be in the description or in the pinned comment down below the video. The trend strategy does not impose any restrictions on the size of investments. The amount invested is determined solely by your financial capabilities and risk appetite. I do not recommend to new traders to invest more than 2 or 5% of your capital. I guess let's summarize the algorithm of trade by trend. First, you need to select the time of the trading session and of course the asset. When the choice is made to determine the direction on the chart, which trend prevails on the currency pair. The next point is to determine the size of the waves of a given trend movement and with this help build a range of movement lines. There is a lower boundary, the support line, at lows of the price when the chart makes the reversal on the upper boundary, the resistance line, which passes through the high of prices. The next step is to determine the entry point and expiration time. As time goes by, we start taking into account the convenience of the time frame and the strength of the trend. The wider the movement corridor, the longer the expiration time can be. As you see, the main pros of this strategy is simplicity, profit potential, and risk management. And what are the cons? The first one is false breakouts. Trends can experience temporary reversals or pullbacks, causing false breakouts. These false signals can lead to losses if traders enter positions based on a perceived trend change that ultimately fails to materialize. Discerning false breakouts from genuine trend reversals requires experience and skills. The last two is whipsaw markets and dependency of technical analysis. And about these two we will talk in our next videos. Because now it is about time to pick up our second plus of the day. Thank you everyone for watching this video till the end. Do not forget to subscribe to this channel, leave a like, and of course drop some comments. See you in a while, have a good one, bye.